Options Corner time. Kevin Green's joining us, senior markets correspondent for the Schwab Network. And KG, I don't want to mush this rally, but it's become an end-of-the-month tradition to watch this thing turn green from the depths of pretty serious sell-offs. It seems like this is deja vu to me. You make some sense for me using your levels wherever you want to go, but am I watching this movie over and over? Am I going crazy?
Look, Alex, I'm cool with it if this is going to be the trend on every month end. I can tell you that. Let's all put it on our calendars. Yeah, we usually have seen this over the last couple of months here. We have a flush to the downside. Today we had a catalyst, obviously, when it came to the trade talks and some other updates coming from the White House. We saw this flush to the downside. Now, early this morning during Morning Trade Live, we kind of talked about the levels like we do every single day. But that 58.50 level is a key area that we highlighted here. And that's exactly where the market bounced off of. We started to kind of consolidate. You and I were actually discussing that pretty much in real time on NextGen, and then we started seeing some buyers stepping in. But the reason why this is actually very important, we've had this kind of flagging pattern taking place since Wednesday, and today we actually did see that breakout. And what happened with that breakout? We saw some other buyers really aggressively getting into this market, really pushing this price higher. So it's not only the fact that it's month end, but you also have a technical structure that has taken place where we have broken out of, and now the market's trying to obviously push higher. Now, what could actually happen going into the close here? Could we go back to 5,900? That could be the case. Could we come back and really try to test that upper channel, that white line there? That could be the case as well. Even if we do come back, test it, you'd like to see some buyers stepping in over the next couple of days and continuing to push this market higher here. But on an intraday basis, what could be the possibility for today? I think that's the question that a lot of people like to ask, especially when we have such a aggressive reversal and month end. 5930 is actually an area where we do see some confluence with options positioning on the call side. But I will say 5940 is not outside of the realm of possibility. And the reason why I bring this up, we only have around 25 minutes left to go in the close. And if you look at the 5940 calls right now, they're still going for around $6, $7, which is actually really expensive going into the close with only 20 minutes left or so. That is really kind of signifying the fact that obviously we have excessive call buying activity taking place, but there are some buyers at that level as well. And as we see more buyers attracted to a particular strike, premiums will then go up. We also have this kind of lifting in the market taking place as well. So if we are going to squeeze 5930, first area that I'm focusing on, but 5940 is actually a very interesting strike going into the close here. Overall big risk, what do you have? You have month end, you got a lot of trading taking place, a lot of rebalancing for institutional portfolios, for certain indexes as well. So you can see this China churn taking place. You get concerned if you do see, obviously, the buyers of those calls selling out and we get this flush into the close here. But this has been a pretty decent rally. I like this trend. I've been marking this on my calendar. I know that you have been talking about it as well the last couple of trading sessions. It seems like the tradition of us failing and then really trying to exceed and making intraday highs on these month ends continues to stay into effect.
KG, I was going to say, and I had no way of quantifying it, so you just drew attention to me to these zero DTE options that are still priced quite expensive. I was going to say, you reasonably could make the case that we could be 25 points higher or lower from here in the next 20 minutes. And the market's almost priced that way. I mean, if you look at kind of where the 25 delta options are, that's the 59.10 put, and it's the 59.50 call, actually a little bit higher, the 59.55 call now. So a little bit of call skew into the close, maybe reflective of that trend that we're talking about. But that reflects a good 45-point range where the math says 50% chance you could touch one of those levels either way. So, I mean, where are you looking? Are those sort of the roadmaps as to where this could end up? 5950, 5900 maybe to the downside?
Yeah, 59. I would say 5940. I like to be a little bit cautious. 5950, definitely a round number there, but that's where you probably see a little bit of a fade. 5940 seems like.
Oh, I'm looking at ES. So yeah, this would check out.
Yeah, exactly. Yeah, because there's a 10-point, 12-point difference right now just based on that time value skew. Yeah, so if you're looking at 59.40 for the S&P 500, I would agree with you here. 5,900, we have to be mindful. Once again, there is a pen risk there. You just don't want to see a fade, and a fade can accelerate pretty aggressively. Once one person sells out, everybody starts to see that action, and you have this domino effect to the downside. What you want to also keep your eye out on is going to be the advanced to declining stocks. I utilize the $ ADD or the NYSE advanced decline difference here. And we have seen a meaningful difference, especially for today. The correlation is very strong. It usually is strong, but today it's very strong. And the reason being, it's actually market breadth that's carrying us higher. It's not the mega cap names. So as that line or that advancing line continues to move higher, the S&P 500 is doing the same. So where are you looking for other catalysts? What if you do see some buyers actually stepping into the NVIDIAs, which I believe is still down about 2% on the session, if I'm not mistaken, probably a little bit close from there. Looking for other stocks like those mega cap names really catching a bid. That'll really give us a little bit more of a thrust. But if you see that advanced decline line and that white line start to aggressively move lower, that's when you know that we probably will be losing some steam. Also looking at total volume for the S&P 500 total composite volume here, we're probably going to have the largest volume probably for the week. We're on track for that right now. Kind of makes sense given the month-end dynamics. That's also a good sign for the most part going into the close. Hopefully that's going to be on the positive side rather than the negative side here, Alex. And then the last thing I wanted to highlight here before we jet, there was another reason why we needed to recover here today, and that's because of this upward trend line that we've had from the lows, basically those April lows from the Liberation Day lows here. And we were actually violating that upward trend line when we hit the lows here today. And that's not something that you wanted to see going into the weekend. A violation of those trend lines in the past, we have seen some rollovers and some failures. And you can say that we have been in a little bit of a consolidation phase. So as long as we are able to hold for the E-mini S&P futures, 58.35, 58.40, let's say 58.65, my apologies, going into this weekend, I think that's going to be a win for us. It seems like we're going to do that right now. But as we kind of talked about, anything's possible on a day like today. But this looks like a pretty decent setup for today's session. You like to see those buyers really trying to step in.
KG, we're going to catch up at the closing bell. You'll be on the panel. We'll wrap things up. We'll set up next week. But I think that's a good place to leave it until the close. And we'll find out, do the Bears win this tug of war to the Bulls as we're basically